please like and comment on the video below. That will allow me to produce better quality videos and more of them in the future.
So here's a trade that I did not so long ago, and I don't actually make money on this, but it contains a couple of important bits of information. So you can see here I'm trying to establish a position at 2, and I've accidentally left global settings on, bit of a cock up there, but I go back into the market, try and re-establish the position from there. So I'm looking for a drift from this point onwards. We're at the lower end of the range, but we're not at the bottom, and we're just looking to establish a position. So there's my position in the market, got £1,000 in. It looks like it's going all right so far. So I go to add to that, big spike up. Now when you see that, it can be really tempting to jump on the back of that, but one thing that you'll find, especially in these racing markets, especially if they're lower quality, is the market will snap like that now and again, and typically what happens is it will snap back. So if a position starts to head in the direction that you want, make sure you've got in your mind where you want to establish the position, how much you're going to use, and why you're doing that, and stick to that theme. Don't suddenly start chasing the market, because as soon as you start chasing the market, it will beat you up. It will whipsaw all over the place, and you'll have a duff trade. So go into the market, say, this is what I want to do, this is the level at which I'm happy doing it, and if the market runs away from you, forget it, just move on. You know, you've missed your opportunity. Don't go charging after it like a bull in a china shop. So you can see what's happened here is the price has gradually come back in again, and in fact if you look at the graph that was just displayed, you can see actually that the longer term trend is generally coming down. And so, you know, in fact probably I've made a mistake here, and I only really realized that when I looked back at the video and could see that the trend was generally coming down. But you can see we're still in profit, so I've pitched some orders above the current level where I think the price may reach. And as I always do, I'm doing that to establish a position in the market that I could potentially exit at. If the price starts to race up towards there, I can cancel those orders out. You can see another back order came in there and has increased the volume here at 208.210. It's important to realize that historical volume has less significance than what's happening at this moment in time. So despite the fact that we can see clusters of money at 208.210 and at 202 and 2, that's historical volume. Half of that, at least half of that, arrived a long time ago. So it doesn't bear any specific relevance to whether the price is going to stay at that point or not. We're more interested in where the money is at this moment in time and where it's being matched. You can see on the second favourite, it's being matched a little bit low, which is making us hold our position. But you'll see about now, you know, it's not going up. In fact, you know, I'm slightly worried that it may be going down, and there isn't much money to hold the price up. So I start exiting my position here. You'll notice that I just don't dump it all in one go, because what I'm trying to do is get a good average exit price. I'm not sure what that exit price will be, but I'm just trying to gently dribble that money back into the market. One of the reasons for doing this is if you dump a trade, you know, it could be in a fast moving market or there's a loose horse, you just go bang, 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 get rid of it. You know, if something dramatic happens that radically changes your position, then you just get rid of it straight away. But a lot of markets are like this, where the trade isn't really coming off. So what you do is you just dribble that trade back through, and the advantage of doing that is twofold. One, you get a generally good average exit price, generally above the price at which you would have hit the panic button, but also you don't scare the market. If you dump that position back in the market, you may move it a few ticks. So by dribbling your order back into the market, you achieve a good average exit price and you don't scare the market.